Today, we're going to be backtesting some inflation data out of the Canadian economy and out of the United States economy in the form of PCE. And we're also going to be asking ourselves the question, what advantage does a professional economic calendar actually give you? And I think one of the things that a lot of traders aren't even aware of is that, free calendars, retail calendars don't give them all of the data that professionals have access to, right? So you just take this. This is Monday, August 4th. Here's Forex Factory. Again, nothing against these companies, FX Street's the same way. Here's what they give you. They give you an actual number. This is the number that's released when the data point comes out. Then they give you a single forecast number and they give you the previous number. But what you might not know is that there's a actual full range of forecast expectations, not just one number. So if you go to a professional calendar, you'll see a high and a low, and this represents the full range. What's a range? Well, for every major economic event, banks and institutions are surveyed, and they all give sort of their best guess as to what they think the actual number will be. On a professional calendar, that range is put into a high and a low. So you can see here for this release, the low is 0.3 and the high was 0.4. Maybe not the best example, it's real close grouping, but here's the CAD employment change, right? So the low was expected at -10 and the high was expected at 25. So what this tells you is I actually have a standard. I have a range to know when there's going to be a big surprise. So if the number 83 comes out here, in this case for the employment change for the CAD, I know this is well above the high of what was expected from all analysts. And that information is extremely valuable because risk events will move the market based on how big of a surprise there is in the actual data release. And if you're just relying on a sort of a free calendar like this, again, nothing wrong with a free calendar, but you just don't have access to the data that professional traders are actually using every day to make their decisions as they analyze risk events. So that's the main difference. There's one other difference as well, which is that, when you're analyzing these events and you're sitting there, and you're starting to sweat a little bit and the number's about to come out and there's a countdown, right? And you have, the audio squawks on and, it's very helpful to have this little lightning bolt feature that pops up. And all this does is it flashes here if there's a deviation outside the range of expectation. So what it's cluing you into is saying, okay, there's a major surprise. There's a major surprise. It was either lower than everyone expected, or it was higher than everyone expected. And surprises tend to move the market. Again, it's not a silver bullet. You can't just say, okay, these are going to win, be winning trades every time. But those two tools, the full range and the lightning bolt, just give you a significant edge against a lot of the other traders that are out there in the market. So that's the way that you use a professional calendar. Those are some of the advantages. But now for one of my big frustrations. Throughout the years, as I've looked at these events and I've looked at different tools, and I've been trading and trying to use different types of tools, one of the things that's frustrated me is I can't actually see a very good historical picture of what happened around these events. So if I look at, say, the euro dollar on TradingView, and I want to go to the 1 minute chart because I want to be fast on these events, right? I can look at the 1 minute chart and I can try to scroll back. And the problem I run into is every time I scroll back, I just run out of bars really, really quickly. So if you look at this, I'll scroll back for you. Now I'm out of bars and I'm only at Sunday, July 20th, and today is August 4th, right? So it's very, very difficult for me to back test anything meaningfully, particularly risk events where I want to see what's happened, after 60 seconds. I want to see what's happened after the first few seconds. Can I get in? Is there an opportunity for me, right? So it just makes it very difficult if I don't have a tool that helps me do this process. Until now, we're really excited to announce a partnership between Forex Tester Online and Financial Source, and we're running a really cool promotion over the next few days. So if you see a link below this video, just go and click on that link. You can get all of our macro tools and you get Forex Tester together. So it's really cool. Just check that out. But one of the advantages of a back testing platform like Forex Tester Online is that this will allow you to pinpoint the exact time and place of when your risk event happened. And then you can go through it in real time, see how you'd react, and then also build a trading strategy around that. So let me log in and just show you how this process works. So I'm going to log in. I'm going to create a new project. And I'm going to give this project a name. Let's say the inflation tester. You can see I've already got one here, but let's just create another one. Inflation tester is my deposit. Set an end time. I'm in UTC -4. So you can set these here. And then I want to look at my symbol. Let's say dollar CAD, because we'll be looking at the dollar CAD. Create project. Bingo. So now I click on this project, and now the Forex Tester is great because it makes it really easy for me to jump to different locations in time without having like a 20 to 30 day restriction on the 1 minute chart, right? And I can do so many other things. Like I can actually place trades here and I can see how my strategy works. I can build custom trading strategies, which is really cool. I can easily go down to the 1 minute chart, which is what I need for testing risk events. So a couple of the key features that I use right away are this one here, which is I can jump to. So I can jump to a price, custom date, next day open, historical moments, sessions, psychological levels. So in this case, I want to jump to a date because what we want to do is we want to go test now PCE, and we want to test Canadian inflation releases. Generally, employment and inflation releases really move the market. So what are we looking for? Well, we're looking for a big deviation outside that range. And then I want to see what has happened on the chart, and I want to build a trading strategy around it. So the first event up, we'll test a few months back. The first event up is March 28th, and that's going to be the US PCE. We'll test a few months, see how we go here. So March, we have to scroll back. March 28th, and this is where we should find core PCE out of the United States. So here's core PCE. Now, what are we looking for? We're looking for a deviation, remember, outside this range. If it's inside the range, it doesn't mean it can't move. There's lots of other strategies you could test around, what comparing the actual to what the range was and what the forecast was. But just to keep things really simple, to find those sort of no-brainer trades, we're just looking for something that deviates outside the high or the low. We want the whole market to be shocked, right? And so in this case, we're not seeing anything. It's within sort of the range of expectations. No lightning bolt has flashed. And so we're just going to leave this one alone. Okay, so that's March 28th. So now we go to the next one, which is going to be April 15th. So here's April 15th, and we are looking for CAD CPI. Again, you can see the full range of numbers come in here. So when we surveyed what you saw is they were all between, for the CPI median, right, and the CPI trim, they were all between 3.0 here and then 2.8, 2.9. So very close grouping. So this was actually a good candidate to get a deviation outside the high or the low. We didn't get it. That's okay. We can move on to the next one. So the next one comes in on April 30th. So we will go to April 30th. And this is going to be core PCE out of the United States again. And again, no luck, no major deviation. So we'll leave that one alone. And we'll move on to May 20th. So May 20th is here. And bingo, we've got our first sort of major deviation. So what happened? Well, we were counting down. The number came out. This was the range of expectations that all the banks and institutions said, okay, this is what the numbers should be between. And then the lightning bolt flashed because we were above both of these numbers. There was a minor revision, 2.9, 2.8, so it's not a big deal. And these sort of, neutralize each other because this one was a little higher, this one was a little lower. But these both exceeded expectations. So now, if you had a traditional setup and you just had TradingView, you'd kind of be stuck because you got to scroll all the way back to May 20th, and we're in August now, right? But what's great is Tester allows you to now go inside their platform and program here, and you can immediately jump here to May 20th. So we'll go over here to May 20th. I just want to check, just make sure we're right here. Yep, May 20th. Now we go over here to Forex Tester. Let's just wait for it to load up. All right, you can see the time here and date, May 20th. And you can even jump right to the actual event, but I kind of just like to play around with these buttons and let it go a little bit. So we're going to zoom through here and we're going to get to the actual event. So there's early morning. Keep going here, keep going. Okay, now there's CPI has come out. So we can scroll back here. We can see kind of exactly what's happened. So open this up. You can see here's CPI. There's a slight graphic here. Again, we don't have all the numbers, unfortunately. I need to chat with Forex Tester about getting all numbers integrated into their platform. But if you look at this here, we can see exactly what happened now as these numbers come out. So I slow the speed down, and here you can see, here's the release. The news breaks. We can slow this down. Okay, here's the event happening in real time, right? Now, one of the strategies that you can employ is, if you think about this from first principles, if there's a deviation that is outside the full range of expectations and all of the market participants are shocked, right? What that means is that this price should continue. So the strategy we can build around this is just a simple entry after the 1 minute candle bar. So we let a 1 minute candle bar close. Now you did this earlier, there's lots of strategies you can build around this. We're just going to go really simple and we're going to try to scalp a few pips off of this initial move, right? So we just let it go here, let it go. You can see it happen. You can see how it reacts. Okay. Now there's the minute candle bar forming. So we will just go here and then I just click here, place an order, boom. Order triggers, you can see right underneath here, order is executed. So now you can test your strategy in real time. And our idea is, we want to put our stop above here. We can have kind of a mental stop for now, and we can watch and see how this goes, right? So you see now price is sort of like moving in our direction. And the idea is just to scalp a few points off of this move, right? See price continuing to move, continuing to move. And then depending on what strategy you want to build, right, you can just take a few pips off of this move. Maybe you want to hold this more long-term and you can test that. Maybe you want to sell on a retracement, something like that, and you can test that. There's many different things you can do. The Forex Tester allows you to see the full range kind of possibilities here. So we can see you'd have an opportunity to scalp, kind of speed it up. And maybe you want to hold it a little bit longer, right? And you can build individual systems off of this. The other thing you can do, which is really cool, is you can change the currency pair. So one of the things that we like to test is, okay, the dollar CAD's fine, right? But let's say we want to trade a pair that's a little more volatile, right, to get a few more pips out of it. So let's say we wanted to trade the Great Britain pound CAD. So you just switch here to pound CAD. Are you sure you want to have the symbol? It may affect your analytics and performance. That's fine for our purposes, right? Now it's preparing the chart. Now you can see the same thing happen at the exact same time. And the beauty is you don't have to go anywhere. You don't have to reset anything. You don't have to scroll back. I remember the days where I was scrolling back, testing risk events, just scrolling back on like MetaTrader, TradingView. It's a disaster. So now we click play again. There you go. So here's the event that happened and broke. You can see it progress here. Now there's the new candle, 1 minute candle being formed. So we can go up here, new order, short, one, place order, bingo. Now we're going to watch and see what happens. What's great is you can also adjust. So in this case, say you want to move like your stop loss up, you could move your stop loss up above here. I'm just struggling to get my little face icon out of the way. But you can move your stop loss way up above here, for example, if you wanted to put your stop just above where the news event happened, right? So stop's adjusted. You can see that easily there. Then we keep going, speed it up a little bit. There you go. Remember, the same sort of potentially you could have scalped something off of this, or perhaps you want to hold for longer, or there's other strategies you can deploy and try to sell maybe up around this block here and try to build a strategy that way, right? So depending on how you wanted to handle that, this tool is just invaluable for helping you analyze what's going on and back test any strategy you want to build, right? If you're a retail trader, this data in the economic calendar is absolutely invaluable because you can't get this anywhere else. And this is, you have to have this to really be able to actually trade risk events. So to know, is this a big surprise? Did it really deviate from consensus or did it not? So let's keep going. So we've got, that was May 20th. So now let's jump over to May 30th. Let's see. May 30th, we have PCE. Okay, no major deviation on PCE this time. No worries. We'll move on to the 24th of June. 24th of June, we've got another Canadian CPI release, but we've got no major deviation. Again, you could go right back over to Forex Tester and just see, okay, what does no deviation look like? What does it look like if there's small revisions or large revisions? You know, you can test that. Then we will go over to June 27th, and we've got a slight deviation here for core PCE. So we'll go take a look at this one. So I can head back to Forex Tester and I can just go to here. Let's do euro dollar. Yes, let's test out euro dollar. And I want to jump to, let's see, 627. So I'll jump to custom day, 627, loading the data up. Now I can fast forward this into the actual day. I can start to analyze exactly what I want to do. So let's just back this up. All right, so here's the data. The data is released. And again, what's the strategy? Well, I want to just jump in after the 1 minute candle. Just back this up. So here we go. Here's the 1 minute candle, new order. This is my strategy, right? Get in, place order, buy market. So I'm in, 60 seconds. Why 60 seconds? A lot of it's just waiting for the market to settle and just to see what the market wants to do. So I've jumped in. Now I've got options, right? About 10 points in profit. Maybe at this point I want to move it to break even. Maybe I want to lock in a little bit of profit. You know, I can do whatever here and I can just run this out and I can continue to test. So maybe I want to build a strategy that just always brings these to break even after the first minute and then you try to get a big run. Maybe I want to build a strategy that just allows me to scalp, right? But what are the two key tools? The two key tools are I've got to have the data, let me know kind of like what's happening. And then I also have to be able to test it, those two things. So we can just see this one play out. We can run it out here, right? And then you can see kind of what's happening throughout the rest of the day. Here you had a kind of the potential of about 25 points as a scalp, full potential here. You can run the rest of the market out here. You can also change the from 1 minute to 5 minute, which is nice. And what I love is you can change from 1 minute to 5 minute without sort of losing your place, which is great. So now I can just test 5 minute. I can say, here we go. Well, it seems like it's a little more reliable directly after the event, and you can keep, testing as you go. Okay, so we've got two events that had major deviations. Let's keep going. We have June 27th. We got July 15th is the next event. July 15th. And we've got nothing happening with core CPI. Actually, there was two CPIs released at the same time. So nothing happened in the Canadian CPI, which is what we were looking for. And then we go over to July 31st. And this is PCE, I believe. Here's core PCE. Nothing has happened really with PCE. So that's a summary of how you can use both of these tools to test Forex Tester and Professional Economic Calendar. These are great tools, guys. If you get a chance, go visit the link at the bottom of this page. You can see our promotion. You can see it here. You get everything from Financial Source. You get our classes, our tools, our calendar package, our interest rate probability tracker, our positioning insights, and you get all of Forex Tester as well. One low monthly price. So go over to that page, sign up if you get a chance, and I'll see you guys in the next video.